please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Still counting down to pre-open. The SGX Nifty is now indicating a 50-point gap down. So be prepared for another gap down. Mr. Tulsian, you know, the way construction stocks fell yesterday, all the infra construction stocks, NCC, IRB, your thoughts on that?
See, Anuj, actually, I've said yesterday in the afternoon show that we are in fact seeing the liquidation of the cash holding of the retail traders to finance the losses, because this is always seen happening, that they hold the investments in this all mid cap and the second run counters, mid and small cap, and hold the position on the long side in the F&O, and they are always seen as get butchered. Their cash holding gets sold for financing the F&O losses, and at the end they are left with nothing. So this similar situation is seen happening. In fact, when you talk to on the street with the retail people, they are all seen holding long positions either in the consumption related stocks or in the banking stocks, and that is seen, but it's difficult to give you any specific reason. And when you see this kind of uncertainty seen coming in, where the frontline stocks is seen available at such a good valuation, obviously the profit booking is seen in this side counter, and as such the infra and construction related stocks have not been very much in the news because of the Supreme Court order also for the last couple of days.
Okay. Well, it's only a few seconds for the markets to open, so we will just wait by and see if there is any mayhem. It's mayhem on the other side at the moment, starting at about 1% higher. So we'll just let this pass and probably look for the rupee trades. We probably should pull up the other currencies also to know how the currency market might pan out.
Not too much of strength right now in the dollar rupee future. It's just 0.1%. That's it.
No, the dollar itself has not strengthened since yesterday. If anything, it's a few pence lower, a few points lower. So, okay, the rupee opens a little stronger. Remember, it was 58 when we went to bed, 71.58. So the dollar's 25 cheaper in early morning trades. But we will have to see whether this is a sustainable one, and of course whether this strength will apply to equities as well, because there are a lot of people who would vouch that perhaps rupee got oversold in equities. There is a significant amount of opinion, especially in stocks like consumption, as Mr. Tulsian was saying, that there is still overvaluation. So what happens in the currency may not necessarily replicate in the equity markets. At the moment, still in the green, but I don't want to read rates. Let's wait for the market to settle down a little further.
Yes, we should. But just a couple of stocks that may react to news. Hathway Cable seems like it could continue to move on the upside. In pre-opening, it's up almost about 4%. It was up 20% yesterday on that partnership with Netflix to provide video streaming. Muthoot Finance reported a good set of numbers, as Abhishek was also telling us. The highest loan growth in the last 11 quarters. Asset quality has improved, so that stock is in the green. In fact, Mr. Tulsian, I wanted your thoughts on Muthoot Finance. At 400 rupees now, how does the risk reward look for an investor? And how did you read into the numbers? They looked quite good.
Yes, Sonia, the numbers are seen to be really quite good, and I don't think that there is any kind of complaint on the growth, asset quality, and maybe the earnings. But I think that people are worried because these are all the back-ended number of the June quarter ending June, and now people are more concerned and worried on the Kerala flood. What will be its impact on the NPAs, recovery, business growth. But taking all this into consideration, if you really see the business model and the valuation now of Muthoot Finance, in fact, we find a good value in the share at the current level of around 400 or so.
Okay, DHFL is opening 6% higher. Don't know if there's news flow and whether it would sustain here, but just keep an eye on that one. HCC is up 5%, but of course beaten down stock, so that's interesting one. CESC is opening 2% higher in pre-open. So these are some rates. Jet Airways 2% down, of course. IRB Infra, which was down 10% yesterday, is down 1%. And Titan, after yesterday's big fall, is also seeing a bit of a decline right now. So let's see how some of these stocks pan out. But for now, it's rather stable in pre-open. Let's see if we're talking too early or not.
I'm just waiting to see if we are getting the first bond rate. Yesterday it closed at 8.06, and we will have to wait and see. It doesn't open as quickly as the rupee market does. It takes a little while for the first deal to be struck. And at the moment, the rupee has shown a little bit of strength that along with the lower crude price, could impact bond opening, but we will await the first trade on the bond market. Meanwhile, we are joined by a bond and rupee expert, Abhishek Upadhyay, the senior economist of ISEC Primary Dealership, joins us on the phone line. Good morning, Abhishek. Thanks much for joining us. Well, do you think that bond sales have reached an exhaustion point at 806? Would you be a buyer?
Lata, so you're right. So last month, there has been a marked shift in market pricing of RBI rate hikes. So if you recall, at the end of the August monetary policy review, market was not even penciling in a December rate hike. The swap curve was not fully pricing in a December rate hike, whereas now both an October and a December rate hike are fully priced into the curve. Whether that means, would that mean that, does that imply that there cannot be further sell-off? I wouldn't say that. In the near term, I believe that yields would remain a function of INR and crude prices. And simply the fact that INR is approaching long period averages in terms of real does not imply insurance against further decline. External conditions will remain important, and especially crude prices. If they are to go further higher, there is an asymmetric impact of that on both in terms of RBI hike expectations, but also on fiscal parameters.
Okay, for now it's 8.05. Yeah, 8.05 I think is the first tick that I saw. Abhishek, but you know the yields have hardened for 7 straight sessions now. Do you at least expect some pause in the near term? I mean, what are you forecasting?
So we did expect 8% levels at the end of the August monetary policy review. We are already above that. Typically, you would expect some consolidation after a sharp sell-off. But as I said, in the near term, if we need some stability in INR, we need some decline in crude prices to really get some calm. As long as those variables don't improve, I would not preclude further pickup in yields yet.
Oh, okay. Is there anything by way of OMO that can assuage the market?
Well, that is another sour point. So because INR sell-off also implies that RBI will be more cautious in terms of its liquidity stance. The OMO expectation possibly has also not been as OMOs were expected last month as well, but RBI abstained from doing that. So there has to be an explanation why that did not happen. If INR had a role to play there, then it might have a role to play this month again. To the extent that markets are already expecting an aggressive OMO schedule over the second half of the year, the surprise could be on the negative side.
Okay, and on the rupee, by the way, 71.42 now is where the rupee is trading. Abhishek, it doesn't seem to be as bad as what the other emerging market currencies have gone through this year. I mean, we were just talking about how the South African rand has been hitting new lows, the Mexican peso has been whacked out of shape. Do you reckon that the Indian rupee at least would outperform the other emerging market currencies going forward, or are we looking at a steeper fall?
No, it should. So this is not 2013 for sure, where INR has been singled out. We have seen even the developed market currencies weaken over the last few months, which was not the case in 2013 again. We are much better in terms of our macro buffers. Forex reserves are more than 125 billion above the lows that we saw in 2013. CAD is lower, but the worry on CAD is that, while in percentage of GDP terms it is lower, in absolute terms you are likely to be still closer to those 2013 levels.
Correct.
And when there are external strains, it is the absolute level of CAD which starts to matter more than the percentage of GDP terms measured CAD, because this needs to be funded by capital flows. So that remains a worry, and it is important that we get some comfort on the trade deficit numbers over the next few months. It is important that we don't get a trajectory that continues to head north in terms of CAD. So therefore, crude prices here will play an extremely crucial role. But even policy action would need to be taken. Policymakers cannot, while this decline is okay, and nobody's saying this is speculative attack on INR. But policymakers cannot afford to sound complacent about it either. And both in monetary policy and in terms of direct efforts to contain CAD, certain steps are certainly warranted.
Point taken, Abhishek. Thank you very much indeed for joining us with your first take. So far, the government has not wilted and reduced the excise on crude prices. And I think that is the position to take. We cannot be irate consumers. The big reaon for the current account deficit actually is the oil bill.
Exactly.
So, I mean, it's growing ferociously, even at 85 rupees at petrol. If this is the level of consumption, then clearly, you know, the brakes need to be applied. Otherwise, we will pay with macro bills.
Yes.
You know, some other macro instability will happen because of current account deficit. So we have to resist populist
and, you know, I think that's been my position as well for some time, that, you know, in a country like India where you import 90% of the crude, you can't pass on, you know, can't be looking at excise cuts. Having said that, you need to work on public transport, have good public transport before, you know, we say that, you know, benefit can't pass. Can't have it both ways, of course. But 6 minutes left for markets to open. The pre-open has settled 5 points lower on the Nifty and 21 points lower on the Nifty Bank. So nowhere near what the SGX Nifty was indicating in terms of points, of course. Ashwini, your thoughts? If we open here, is there a trade?
See, I would think even a flat opening would qualify as some sort of a counter trend rally. So, you know, if you get your 15-20 point up move on Nifty, 50-60 on Bank Nifty, that would be a good reason to sell, because again, hardly two sectors, IT and pharma, are positive, and that also not by too much. So, you know, the 1,000-point decline on Nifty Junior will again come back to hit. So I don't expect more than half an hour, you know, whatever upside is there to last.
Okay, and what about the 9-10 call, Ashwini? What are we looking at? You know, some of these IT stocks continue to move up. I mean, what is your view there? And also your 9-10 call?
See, if you are a compulsive buyer, you know, go ahead with IT pharma. But if all sectors are in the negative, your odds are on the downside. And particularly on these smaller Nifty Junior type stocks. So anything that's, you know, non-index, the buying just dries up out there, and now you will see the pain again happening on the mid cap. So CG Power is a sell with a stop of 57, target of 52.
Okay. Well, it's still a sell, and at the moment flat actually. Nifty Bank may be a bit under pressure, but we'll have to wait and see. At the moment, we don't have enough information to even know how the markets will open, and then thereafter how the first few minutes will proceed. Well, Mr. Tulsian, are you... Okay, before I come to you, sir, just a minute. Let's get the commodity cues going. Manisha Gupta.
Lata, thank you so much for that. Well, we have seen pressure in commodities from the New York session yesterday and seems to be getting carried forward in the Asian markets right now as well. So the crude oil prices to begin with have come off its 3.5-month highs that we saw yesterday. Well, nearly 9% of Gulf of Mexico oil and gas output has been cut in anticipation that the Hurricane Gordon will make a landfall there. But the good news is that the hurricane is a Category 1 storm, and it also has moved eastward. So no big damage and no long-term implications are seen because of that. And that is the reason you have seen a decline yesterday in New York and Asian markets as well, trading 0.25% to 0.5% on the weaker side. In the international markets, it also is about the US-Canada NAFTA negotiations, which resumed today. The US and China trade war seems to be escalating. The Chinese PMI data has not come in so positive, and you also have seen strength come back in case of US dollar. So all of these factors do not augur well for the metal space, where you have seen gold prices decline to a 1-week lows. Copper is trading at a 14-month lows right now. We have seen nickel prices trade at a 5-month lows as well. So almost everything in metal space in Asia yet again has started on a weaker note.
Okay, thank you very much, Manisha, for putting all those cues. Well, Mr. Tulsian, I just wanted to ask you, if one is starting to buy in the pharma space, what should the list be?
See, Lata, we have been maintaining our view only on 4 or 5 stocks, and I reiterate and reconfirm them again. Oro Pharma, Biocon, Sun Pharma, Glenmark Pharma and Divi's Lab. Because if you really take a call, probably the situation which we have been seen having happened in the consumer-oriented stocks, probably we may see that getting repeated for pharma also, maybe after a couple of weeks, along with the IT stocks also. Because once you see the things starts getting heated up, it is better to avoid them. And in fact, all these 4 or 5 stocks seem to be having a medium-term potential to grow. So we will confine only to these 4 or 5 stocks.
All right, Mr. Tulsian, thanks a lot for joining us today. And of course, we'll talk to you in closing bell. For now, The pre-open has settled, as we discussed, flat with slight negative bias. If you're looking at the Nifty, if you're looking at the Sensex, it's up 35 points. Sudarshan, your thoughts on pre-opening and any interesting stock idea?
Well, if it pre-opens where it's suggesting, then yes, in the morning after 10 or 15 minutes, actually buy Nifty puts. Don't buy it for today, but buy it for the next few days. I would still remain bearish wherever it opens. If it doesn't gap down, all the better.
Okay, well, some stocks, Muthoot Finance is up 1.5% because of those good numbers. Spark is moving up as well. HSBC has a target price of 565 on Spark. They say that there's been very good progress in the R&D portfolio. That stock is up about 1.5%. And Infosys continues to make new highs day after day. Mitesh, any thoughts on the pre-opening rates? Anything that catches your eye now?
Not much. I think, most of the sectors are possibly opening with less than 0.5% kind of move, but metals could be interesting. I think they are opening gap down, and I would be looking at Steel Authority, etc., other stocks which could possibly show some kind of downward continuation.
Okay. Now that's a minute more for the markets to open. Sudarshan, will you persist with some buy ideas in, you spoke to us about pharma, in any IT stocks?
I wouldn't touch IT today, only pharma. In fact, IT can disappoint on the down, on the upside and actually become very choppy. Pharma today is the only section, and some bargain hunting in top quality FMCGs, Lever I spoke about, and maybe Dabur.
Okay. Well, Fortis Healthcare is starting lower. Not that it has any relation at all to the spat that is now broken out between the Singh brothers. But yes, at the moment, plenty of stocks are reacting even to remote news. The mid-caps also just 0.15 down. So it's really flat, and the market is keeping us guessing on how it might give us the first tick and move